The markets have turned very bearish on the Eurozone, with Italy the centre of attention and spreads of Spanish debt also ballooning. And Sebastian Galli joins me from the London offices of Societe Generale to analyse the latest twist in the debt crisis story. Sebastian, what has really got investors panicked this time?
I think it's the lack of any form of resolution coming out of the Eurozone meetings that we've seen on Monday. What we had earlier in the week is a thematic shift on Italy. That is, the market got quite concerned and to some extent a little bit excited about Italy, and that started roughly around Wednesday, Thursday, and then it's accelerated as we basically hit a very large country for the first time, which to many extents is relatively sound, but people have tried to push it and have been relatively successful at it. We are now hitting essentially the core of Europe. The reason is if you're very big, that means somebody owns you on the other side. That is, for example, German banks are highly exposed to what's happening in Italy, and that means the crisis is now traveling towards the center of Europe, and that means that things are getting very, very, very big. And since the Monday meetings have not really given us any clarity regarding what the Eurozone is going to do, and that is a further integration to basically cap any further contagion. We basically continue to panic a little bit, and the euro-dollar is continuing to collapse, and equity markets are under severe pressure.
But in terms of Italy, nothing has really changed, has it? Berlusconi had this argument with his economics minister, but the fundamentals remain pretty strong, especially in terms of manufacturing and the export sector.
Yes, I mean, if you would look at the fundamentals and you would have the same discussion a year or 2 years ago, or even 2 weeks ago, probably it would not have been a clear target by any shape or form. What people who wanted to be bearish on Italy have done is they have essentially emphasized the lack of productivity of some sectors within Italy, the relatively high debt burden, but it's not actually that high. And all they've tried is a push what we call a point of instability, that there is a yield at which Italy can sustain easily its fiscal burden, and the yield at which it cannot. And what the market has tried to push is basically that price. And since we've shifted into a level where it is no longer sustainable, then we have a vast explosion. And I think that's what some people in the market were looking for, is basically creating instability and consequently some waves going into multiple assets within credit, within equities, within volatilities, which are very low, and basically get some return out of contagion. And they've tried it, and they've been very successful at it. Whether they wanted to achieve that initially is a good question, but this is certainly what they have achieved.
So that's interesting. Do you think some investors are pushing this negative Eurozone agenda as they benefit from it?
That would be a very cynical view of the world. It cannot be excluded. Sometimes people do things without really much thought, and sometimes it's just the passage of time, that if you do nothing, eventually this is what's going to happen, and maybe somebody sees it as an opportunity. That is basically doing nothing, and that's to some extent what we saw on the fiscal side within Italy, that you had some uncertainty regarding the fiscal package, the ability to pass basically the next cuts. That is to some extent enough to lead to that contagion. It may well be, and it does seem to have been to some extent directed. So it was not completely just time going by. There were people looking for it. Whether they understood the consequences of what they were doing is another issue.
Just to finish off, euro-dollar was bouncing in the 140, 148 range, but it has now dropped below 140. When will we see a return to this range?
I think the short answer is there is more chances that we are in a full deleveraging environment. I'm not sure people understand how bad the situation, but it is relatively bad, and that means euro-dollar is playing some catch-up. That means it has some more potential to move lower, and I expect it's going to come back to its range 140, 148 later. But the things have gone seriously bad, and that means euro-dollar has broken out of its range, and it's not going to come back extremely soon. I think there's more downside before rebounds.
Thank you, Sebastian. We'll continue to monitor the developments in this ever-changing situation here on Dukascopy TV. But for now, goodbye.